First up, Circle, the American stablecoin company, previously a startup, tried to go public via SPAC back in the day, went public this week. And I got to say, I am blown away by the results. For folks who don't recall, it was initially looking at a $24 to $26 per share range, Jason. That got bumped up to 27, 28, went out at 31, and then it opened at 69, closed yesterday at $83 per share, and then today it closed at 107.70. And what I'm blown away by, Jason, is just the scale of the growth in value here. I mean, I've never seen an IPO of this scale go up so quickly, so much. Like it's mind blowing to me. Bullish for IPOs, bullish for stablecoins, bullish for crypto. Seems like a big win, but I wanted to ask you, if you were an investor in this company and it listed at 31, how peeved would you be that it didn't price higher?
This is a classic issue. You know, when you do an IPO, you're offering the public to buy shares in the company. The public bought shares in the company at $31 a share, and then the market price for the shares is now $100, or apparently 107. Mm-hmm. So this means, and it was 25x oversubscribed. What this means is they left $70 per share on the table. So if they raised $1 billion, they could have raised roughly 3 times that, 4 times that almost, if they had priced at $100 a share. Now, it's hard to know that that was going to happen, but with 25 times the demand for the shares, you did know that this was going to really ramp up. And this is where having an auction for shares or a direct listing of a small number of shares without raising money is a better option. So what's a direct listing? You put the shares up, but you're not selling any shares at that time. You're just saying, hey, the shares can trade. Then you make an offering, right, Alex?
Yeah.
And so Spotify, when they went public, they just went public. They started trading the shares. And then if they wanted to raise money, they would do it later when they got the market clearing price. If Circle had done that, they probably could have issued their shares at $50 to $100 a share, you know, later this week. So they did leave money on the table, but I think this is like a moment in time. This shows to me 2 things. Actually, 3. Number 1, Jeremy Allaire is an incredible entrepreneur. He builds real businesses. I've known him through 3 different businesses, Bright Cove, et cetera. And he's just been one of these, you know, incredible, you know, entrepreneurs with a long track record. So number 1, Jeremy Allaire is what this is about. Number 2, it's about crypto regulation. So David Sachs, the czar of crypto, and SEC and this administration want to make clear rules. Under Gary Gensler, it was, you know, our way or the highway, unclear. I think people were, you know, unlikely to go public because they were a little bit nervous. What if it gets unwound? And so, in fact, Circle was going to go out via SPAC 2 years ago, 3 years ago. They chose not to, I think because of the regulatory environment. So that's number 2, is the crypto regulatory environment. Number 3 is public markets. You know, there's not enough opportunity for the dollar. So everybody wants to own the Mag 7. Everybody wants to own, you know, these great companies, you know, that are right behind the Mag 7, Coinbase, Robinhood, Uber, DoorDash, you know, that Airbnb, that whole cohort, let's call it the class of 2010.